My name's Luke Cassar. I'm a senior consultant at Finity Consulting. So I graduated from UNSW in 2010. I did the Bachelor of Commerce as it was back then under the co-op program. I also did an honours year in my fifth year. During my time on the co-op program, I had placements in general insurance consulting, in insurance regulation and in investments. And then I during the time before I did my honours year, I did an internship at Finity, and then I accepted a graduate position. So I started at Finity in 2011, and so I've been working here in general insurance consulting at Finity since 2011 for 6 years. So in our practice area, general insurance actuaries, their bread and butter is what we call operating as an appointed actuary. So the role of an appointed actuary is every insurance company has to appoint an actuary to sign off on their their insurance liability reserves. So every year there's a requirement that an actuary has to sign off on an insurance liability valuation. So that's coming up with an estimate of future claims that need to be paid out to policyholders. There's also the requirement to write a financial condition report for each insurance company. So that's where the appointed actuary signs off on the overall financial condition and of the company and looks at it from a holistic point of view and looks at the investments, looks at the quality of their balance sheet, their pricing and underwriting operations, just to make sure the company is financially sound in the foreseeable future. That's kind of the bread and butter, but we do a whole lot of other work for, there's work for workers' compensation schemes. So these are not set up like insurance companies, but we have to as well value their insurance liabilities. We'll often do advising on pricing, so the insurance company's setting of premiums. And then on top of that, we can also advise on their marketing strategy and find segments of their customers that they want to better target or maybe not target. We can do a lot of other things around assessing whether or not they've got appropriate amounts of capital to support their ongoing activities, and through that we can assess, if their own reinsurance strategy is optimum, or if a certain strategy is an optimum strategy that they want to take. So there's really a broad range of things that we do on top of just regular appointed actuary regulatory work. I suppose various firms call them various things, but we would call, if you were to look at looking at capital management, we call that the volatility and capital management area. And you might do what's called a dynamic financial analysis, which is where you basically build a model of an entire company and you run simulations to see what the probabilities of certain outcomes are. There's what we call our pricing practice, so they predominantly look at the pricing of premiums. Then there's our accident compensation team, which includes looking at workers' compensation, but also includes CTP, third-party green slip motor vehicle classes of business. There's also liability practice areas, so they look at when there's, this is really insurance for large businesses when they seek to avoid liability claims from either bodily injury or product liability. So one example that comes up is where you might have lots of slips, trips and falls in shopping centres, and so they need an understanding of their risks. I can think of three broad categories of companies that would hire. There's insurance companies, there's consulting firms, and then there's government agencies. So insurance companies are probably not a surprise, but that will range from some of the really large insurance companies like IAG or QBE or Suncorp, down to some of the real small and specialist insurers. So there are insurers that do medical indemnity. There are insurers that specialise in lenders' mortgage insurance. And as well, there are insurers that specialise only in commercial risks. So as consumers, we wouldn't really have any interaction with them, but they exist as well. So that's the insurance group, or sometimes people refer to them as corporates. In consulting, that ranges from the larger accounting firms that have their actuarial arms, or some of the more smaller boutique actuarial consulting firms such as Finity. The final category is then government agencies. So a lot of the state work cover or workers' compensation schemes have their own actuaries that they use, as well as some of the other agencies around self-insurance for government departments. And one big one that's kind of come up recently is the National Disability Insurance Agency, who's administering and setting up the National Disability Insurance Scheme. So there's a number of actuaries that work there, and they employ a number of actuaries each year. Through the co-op program, I probably had the advantage of going to a tryout of a number of different areas. What really appealed to me about general insurance is it's kind of in the name. It's called general insurance, which basically means it's everything that isn't life or health or superannuation. So it covers things like accident compensation, where you're looking at, say, bodily injury, personal injury, and there's kind of a, there's that element of human behaviour and human care that goes into it as well. Ranges from there, ranging up to, say, lender's mortgage insurance, where that's insurance for banks where people default on mortgages and the bank needs coverage for the amount that's been defaulted. So that kind of specific field will take into account people's behaviour as well as macroeconomics. So there's really a broad range of things that you can, kind of industries that you can get exposure to. On top of that, within each kind of industry or within each kind of type of insurance, there's all the different kind of functions that you can get involved with. So there's not just the appointed actuarial work, but there's the pricing work, there's volatility capital management, there's elements of strategy that come up as well. And so really just a broad range of interesting things that you can really get stuck into. One of the broader issues that's really affecting every aspect of insurance is around digital disruption and new technologies, and how that will affect both the products that insurance companies are offering, as well as the insurers and how they operate against competitors. So in terms of new products and product offerings, there's new technology, things like driverless cars, which could mean big changes for the motor vehicle insurance industry, because it's predicted that the frequency of claims will reduce significantly from driverless cars, so there's less to insure. There's also disruption from the shared economy, so things like Uber or Airbnb, where people are sharing their motor vehicles, or they're sharing their places of residence and leasing that out. That kind of then means that the policyholder of that house is not always going to be living there, and it'll be someone else, and so there's different risks associated with that, and so insurers have to be on the forefront and thinking about how to best price that risk and adjust their policy conditions for that. Other issues tend to be a little bit more product focused, so with any of the government schemes, so the CTP Green Slip scheme in New South Wales is currently under reform. So the government's going to propose, will be looking at the benefits that are given to claimants, as well as the premiums that are being charged to policyholders. There's also the National Disability Insurance Scheme and how that will affect existing workers' compensation schemes, and whether or not that means different prices and things like that. One of the bigger ones too is climate change. So there's this kind of large risks associated with climate change that will most likely affect a lot of the property insurers, and so there needs to be thought about how to adjust pricing and policy benefits for that. From my perspective, the study at university will give you all the tools, and you'll be enhancing your toolkit from a technical point of view, and also trying to understand some of the issues that are leading into the industry. I think it helps as well to try and maybe spend a bit of time on there's the Actuaries Institute website and the Actuaries Digital, which is basically an online magazine, and you can kind of keep up to date on any of the issues there, and see what sort of practice area might take your interest and that you want to learn a bit more about. I'd also try and keep in touch with people that have gone out into the industry, and to get a feel for what the work that they do is like, and also what the company that they work for is like as well, because there's, you can work at an insurance company, you can work in consulting, and they're not going to be the same kind of experiences. So even within consulting, there will be different approaches to work. So I'd also, just keep an open mind, and try and expose yourself to as many different issues in the industry as you can. And there's not really, I guess I wouldn't feel too pressured to need to kind of choose a specialty too early on. So it probably wasn't until my final year that I decided I wanted to go down general insurance, and even then there are many examples I know of people who've been in one specialty and moved over into a different specialty. So it's all very well possible. So yeah.